Welcome back to Startup Accounting 101. This is a video series for founders and small business owners to understand accounting fundamentals for running a business. This is the QuickBooks 101 series. We're covering basics and best practices for the most used accounting software, a small business, which is Intuit QuickBooks Online. I am using a sample company, which is Craig's Design and Landscaping Services. If you have QuickBooks Online, you should be able to follow along. So we are in the products and services section, and this video will cover a more advanced topic, which is the inventory quantity adjustments. Now, there are a number of different reasons to make any sort of quantity adjustments. So we'll go through a few scenarios and a few different ways to be able to make an adjustment. So the first thing would be if there are any lost or damaged items. For whatever reason, it got lost in transit or damaged in transit in the warehouse, something got broken. And so let's go with, let's say this item here, this case quantity. So one of the ways to be able to make adjustment within the product and services listing, you can kind of click the drop down here, and there is an adjust quantity option. So if you did that, it would open up this specific item. You know exactly which one you're talking about. And so, okay, it's by product and description. So you can change the quantity. So let's say one case was broken. So you can change the quantity down to say, one case was lost. And so we have the initial quantity on hand was 550. And so the new quantity, the adjustment will make it so that the new quantity would be 549, losing one case. Now, with all inventory quantity adjustments, there will always be a date. So we're doing this as of today. Or if you had a report that said last week, we lost something, you can adjust the date to whatever date you got the report, the notice that there were some damages. And then you'll always want to do some sort of inventory adjustment account. So this would be your offset account, basically wherever you want the difference, this change in quantity, where you want it to book into. So by default, QuickBooks puts it to the inventory shrinkage account. That is a cost of goods sold account. So this is the default. And in this case, this is actually an okay account to put it into. The inventory is shrinking down. So I'm actually comfortable with doing that. If you wanted to specify which GL account, you have separate accounts to specify, the difference between damages versus, lost items. If there are different accounts, then you have to choose which account that you would want. And then once that's done, you can save and close. And so initially we had 550, and once we make this adjustment, the new quantity should be 549. So before it was 550, now it's 549. So if there are any shrinkage for inventory, that's one of the ways to do it. Now, another common adjustment would be based on a physical count, whether it's a month end or a year end physical count of the inventory. You want to make an adjustment based on, what was actually counted and what we can see on hand. So another way to get to the adjustment screen, you can start with Create over here, and to the very end under Other, there's the inventory quantity adjustment. And so with this, because you're kind of opening up the adjustment, there are no products here, so you're gonna have to find them sort of one by one. So let's say this is the CS the two different, so you've got milk chocolate, dark chocolate. There was a physical count done. And so in this case, you might have a number. So here we can say we made the count where there's actually more than we had thought or expected. And here we can bring it down. So you can do multiple, products at the same time. Let's go 545. So this goes down by 5. This goes up by 6. Again, this is going to go into the shrinkage account and a flow through there. You might have a count adjustment or just an inventory adjustment account, which shrinkage is probably the equivalent of that. But if you wanted to change this, the verbiage, you could do that. So I can save and close. So this changed to 555, and then this is now 545 based on the physical count. You can also override the quantity on hand with the import function. So if you do an import, and I will just use the cost refresh. So originally in the prior video on importing and importing the cost refresh, I left the quantity blank because I didn't want to really mess or affect the inventory levels. But if you have a physical count, and obviously you have a ton of products where the quantity levels have changed, importing might be the way to go. So with this, you will have the new quantity levels here, and then you can import them all. You would have to override what's in there. Again, this can't be undone, but if you have to make these adjustments, you can just put the new numbers, the quantities here, and just make note of the SKU. Understand the unit of measure, just make sure you have the right quantities. So once you do that, you can probably, let's see if I can do the name. Here, case, quantity, let's just put this back to 500. So if you have hundreds, of adjustments to make, this might be the way to go. Just be careful with the adjustments. So change that, and now the quantity in hand is once again 500 for each of these cases. So these are the 3 different ways in QuickBooks where you can make a quantity adjustment. Now, QuickBooks works best when you're co-packing or co-manufacturing your products. What that means is that you're purchasing from your vendor the completed finished good, so that when you purchase something, they're giving you these items, these finished goods. And so with the vendor invoices, you're just gonna keep booking more of these finished goods, and the quantities will keep increasing, right? The quantity on hand for items that are manufactured for you, they should be reasonably updated. However, QuickBooks does not really have like work order or production management capabilities. So if you're buying a bunch of raw materials, so this would be down here. So if you're buying a bunch of raw materials, I only have one type, which is just chocolate. But if you're sourcing a whole bunch of things to make your products, like sugar and like pistachio cream, packaging, all of these things, QuickBooks will not convert that for you into, these finished goods that you're selling to your customers. So the quantity on hand especially if you're sourcing a lot of things yourself and making the products yourselves, these quantities, they may not be properly updated. Okay, the raw materials, like you keep buying the raw materials. So these raw materials will keep going up and up and up, but the finished goods will basically stay the same. In fact, as you're making sales, this number will keep going down. And, you may unintentionally reach either a low stock status or an out of stock status, even if you have product on hand. So if you have raw materials that go into finished goods, I have a recommendation or suggestion of what to do about that. So if we go back to the inventory quantity adjustments, I have created what's called a WIP account for the inventory. Oops. So I have an inventory asset, which is WIP or work in progress. So as you are, using up your raw materials or, opening up the bags of sugar, all of the things that you need, you can sort of flow them through the WIP account. So here, if I looked at the one raw material, this is one of the wafers. Okay, there's no description here. Okay. So I'm using up, chocolate chips, chocolate wafers. I'm using up one of the cases, and I'm going to be using a whole bunch of other things, like I mentioned before, packaging, sugar, whatnot. So as the inventories of these raw materials goes down, it's going to flow through WIP. So I'm just going to save this. So we've used up one case of chocolate. And if I know what I'm going to be making out of that, I can list it here. If I'm not sure, you can break it up into 2 transactions. So I'm going to go ahead and do that. Just know that this could be one transaction if you knew, what you were making. But I currently don't know. Right now, I just want to use up my dark chocolate. And so I'm going to save and close. So that is going down to 19. And so I'm going to open up another. It's also going to come from WIP. So basically out of my WIP or work in progress, I'm going to make I'm going to make some cases, also make some eaches of these chocolate bars. So let's say I was able to make, 50 cases and another 250 individual bars out of that chocolate. So it's going to come out of WIP and then into finished good, essentially. So I'm going to save and close. So now we have more of the products, of the finished goods on hand by doing it this way. Again, this could have been one transaction, but I didn't know what I was going to make. So you can consolidate them all. If you're sourcing for a vendor, meaning if your vendor is already producing your chocolate bars for you, but you might have to source some unique products, or you have a better costing that you have with the vendor, you might want to send a few raw materials there. So when that happens, you can also place those items into WIP. And then you'll adjust the quantity on the inventory levels at the month end, maybe a physical count. Your vendor should provide inventory levels for you at the very least at the end of the month or at the end of the year. And you can always make that quantity adjustment in your books. And so I'll recap some of the best practices. Just a reminder that QuickBooks, by default, all quantity adjustments flows through the inventory shrinkage account here. So if you have something specific you have to call it out and you have to specify it. With production, if you're getting to a size and a production level where you need like work orders, you're just creating a ton of products, you might want to look into another platform like Connexus or Anaplan that's going to help you do this, because this is quite cumbersome. If you're only producing something, every week, every other week, I think this process is feasible. But if you're just, producing a ton of products, you might, have to like level up and advance to another platform for that. And with production, you can use the inventory WIP account basically as a flow-through account for raw materials used and the finished goods created. So that stays within the asset side as you're making these products, and it will only book into cost of goods sold when you sell that item. So ideally, that's what should be practicing, or that's what should be happening. And last but not least, the best practice I can provide is if you do make an adjustment for whatever reason, you should keep records of why you're making that adjustment. Those adjustments should be based on either an inventory level report or some sort of analysis. So you should have that on hand. That way you can say, hey, inventory quantity adjustment number 20 that I'm making, is based on, some sort of report. Okay. And so with that, we've covered the inventory quantity adjustments. In the next video, we will look very briefly at the bundle capabilities in QuickBooks. So like and comment if you found this video helpful. Please subscribe, and thanks for watching.